Hey, good morning. Let's go over today's trade plan. So heading into the open, we have this pre-market resistance zone at 85 to 87, and this is really going to be the zone that helps us establish our short-term directional bias. As long as ES is holding below 85 to 87, we know that the sell side can still maintain firm control, and from here, ES can go down and fill the gap at 72, test the pre-market support and possibly the initial support zone at 61 to 63.5, at which point we could get a buy response. And even at pre-market support, responsive buyers can be active because the overnight session is very balanced, and the buyers have been a bit more active in the short term, but that does not affect or change the overall directional bias, which at this point is pretty bearish. So 85 to 87 can almost be viewed as a short-term or micro bull bear zone, and holding below it tells us that the sell side is in fairly firm control. In the event of a breakout above 85 to 87, and especially a breakout on strong upside momentum, we could see a move quite easily up to 92 to 95. That's an area where sell side may be active, but we're going to have to be a bit more careful because the momentum could be against shorting, and there would even be a possibility for ES to go back up to 1900 to 1902 half. Now, given the bigger picture bearish bias, it still makes sense to short any short-term retracements back up into resistance because this is still a fairly bearish market. It's just that, short term we might have hit a bit of an extreme, and now we can balance a bit and go sideways before we get the next directional push. And again, we've seen a lot of balancing in the overnight session as well. So the game plan is to watch how the market reacts to 85, 87, holding below it. There's still the potential for sellers to step in for a move down to the gap and the previous VPOC. We have pre-market support 68 quarter, 70 quarter, possible spot where buyers could be active, and then initial support 61 to 63 half with an open gap at that zone as well. And again, responsive buyers can be active over there, but just understand that right now the overall bias is bearish, so we still have to be more careful on long setups, and we can be a bit more aggressive on the short side. So above 85, 87, 92, 95, very likely to get tested. It is a possible failure point if the market is going up on mediocre momentum, or I should say, especially if the market is going up on mediocre momentum. And if it's going up on pretty strong momentum, then perhaps we could go even as high as 1900 to 02 half, but then that would still be a area where sell side can step in, so that would still be a short setup on first test. And then in the event of very strong buying, then we can deal with these zones above. But right now, that's really the focus point is to look to short 1900 to 02 half if the market gets there. But short term 85, 87 is really going to be the key point for us to establish the bias on the day because overnight the buyers have been fairly active and the market has been holding up. And then if we fail at 85, 87, we could go down to pre-market support and initial support with the possibility of testing the zones below, but that's something we'll have to gauge in real time and kind of see the level of weakness we're seeing in the broader market because TF is getting pretty exhausted at this point, and even though it can head a little bit lower, it is fairly stretched, so we could see some balancing activity here. So those are the main ideas heading into the open. Let's see how the market reacts to 85, 87. That'll help set the tone for the day, and we'll take it from there.